2007, we wrote a wealth creation study called the Next Trillion Dollar Opportunity, India the Next Trillion Dollar Opportunity. And in that report, it was, I think, by far the best wealth creation study. And the theme was that India took 60 years to become a trillion dollar economy. The second one would come in 6 years, which really happened. I mean, last year we became $2 trillion despite the devaluation. And the third will come in 7 years, and fourth will come in 5, and seventh or eighth will come in 1 year. So there is a massive build-up of income in the country, and the discretionary spend. What happens is, when you are earning $1,000, out of that 900 goes to essentials and only 100 goes to discretionary. But when you double the income from 1,000 to 2,000, your essentials remain at 1,000, whereas discretionaries go from 100 to 1,000. So what is the doubling of GDP is 10x for the discretionary spend. So underlying businesses, if when the discretionary spend is building up and the companies have unique opportunities to scale up 20 times, 30 times, the markets don't know that, which companies don't do that. And it's a fantastic opportunity to encash on this knowledge of what's going to happen in next 10-15 years, that is our investing horizon, and build a portfolio of the companies which are going to be benefited out of this particular mega trend. And hence we created this next trillion dollar opportunity.
So it's been now 10 years that we launched Next Trillion Dollar Opportunity Strategy, and it is a product which has done quite well over these years. Clients have made some decent money. But when we began Next Trillion Dollar portfolio, it had a very humble beginning. The initial corpus that we gathered was just about 100 crores, and we couldn't have launched it at a better time. We launched it in November 2007, and the markets peaked in Jan 2008. So we couldn't have launched it at any worse time than what we did. So 100 crore portfolio actually went down to 40 or 42 crores. So that was the sort of dip that we saw in the portfolio size, thanks to the Lehman crisis which broke out. But after that, the portfolio actually picked up, and things were good.
I have known Motilal Oswal for many years. I have dealt with them in the past, and I have been extremely satisfied with the quality of service and performance that they have consistently given me year on year.
Their buy and hold strategy and a conviction to take a larger exposure in businesses and sectors that would participate in the GDP growth.
They are known for giving good returns also.
They are honest. Integrity was very good. Their research power, their research team, Mr. Agrawal.
Given that Motilal Oswal is one of the country's premier research organizations, they really have got their act together in terms of researching thousands of stocks over the years, and have filtered out companies with great earnings potential and of great value. That gave me the confidence to recommend the Next Trillion Dollar Opportunity as an investment avenue to a few of our investors.
I think the NTOP value add is saying that the fund manager's skill to identify quality stocks, hold with patience. It also needs great temperament to hold with a conviction idea. The performance of the scheme is in the last 10 years or 1 decade is the outcome of the process and the temperament of the fund manager and the philosophy of Motilal Oswal, which is buy right, sit tight.
Because I believe in the India story, and I think this fund is linked directly with the India story.
We had a detailed conversation with Mr. Ramdev Agarwal and his team. He then conveyed that the fund is not even halfway through, and this would deliver substantial towards the end of the tenure.
And since the particular PMS doesn't follow the churning high churn philosophy, it matches with our philosophy as a long-term investor.
If the prices of gold were to go down, what would you do? You would just seize that opportunity to buy more gold and bring down your cost. Likewise, you must do for your equity portfolio also, which will then enhance the chances of your return far more in the future.
we always focused on the underlying growth of the stock portfolio. We kept reviewing each and every company, and we also spoke about the growth the company is actually achieving quarter on quarter and year on year.
Saying that correction is a process of the market. What is important is allocation, asset allocation, and remain invested for the next 15 to 20 years. That's where I think for the first communication itself talks about saying that what are the risks and rewards, and asset allocation is the most important thing when you design your portfolio and investments.
Is to buy right and sit tight, as Motilal Oswal propagates.
Keep on investing in each corrections and use those corrections as an opportunities so that your returns can be maximized.
If I had to tell 2 words to the newer investors, it was you have to invest in this PMS. So do invest. And if it is for the existing customer investors, then it would be please stay invested.
So going forward, I think, as has been the case in the last 10 years, the philosophy and the process of QGLP will get followed in letter and spirit. While past returns can be no guarantee to future returns, what we can ensure to our clients is that the past processes which has led to these returns will be followed in future as well. Adherence to the process is something which, if it has worked in the past, should work in the future as well.
Manish Santolia has done a wonderful job. I think for the last 10 years, he has given return in excess of 10% compounded. So despite being this product being launched at the top of the market, maybe in December 2007, it was just before the collapse. So it must be closer to 20,000 index. Now index is only 32,000-33,000, and yet the product has given 20%, 19-20% compounded for the last 10 years. That shows the prowess of the team and the manager, who has very smartly has been able to find the companies over the period of time, and he has a style of staying in. So the churn ratios are very low, and the holding period of each and every company has been very good. So investors have, I think it is one of the best selling product in the world on Indian equities, and I think it has been recognized also in some forums for its wonderful performance, and we have taken this product to global investors also. So this has been a fantastic journey, and I think now, being a $1 billion product, now it has a new journey. I mean, not only that, it is a multi-cap product. Manish is matured, and opportunity is very large. So we think this is a great opportunity for the new investors to come in and give opportunity to Manish and MOMC to build a portfolio and create wealth for all the investors.